Facebook Live, here we go. Okay. Okay. Let's go. Okay.
Are we on?
I think we're on. I'm waiting to see it. It looks like there might be a little bit of a delay. Okay, so we're just gonna go with it. I might not even just like pay attention to this. Okay, so let me come back to you. All right, so let's go ahead and get started.
Hi.
Hi, all right. Hello, everyone who has decided to come and join us, whether you are joining us live or joining us a little bit later today. I totally understand. I'm telling you, what we're about to give you is going to be, breaking news. I mean, a lot has been going on within the last, well, it's been the last month, but a lot has happened within the last 24 hours. And we're going to give you all the details, things that you should be worried about, which is not too much, and kind of breaking down what's really happening. So for those who do not know, my name is Tiffany Hooper. I work with My Home Group, and I am with the mortgage expert herself, Denise McManus with Change Mortgage. And Denise, I don't know about you, but my phone had just pinged breaking news. The Fed announced that they had increased rates, and I was reading through it as the texts and the phone calls all started to roll in. So I can't imagine what your day was like yesterday.
A blur. I just said, look at these bags under my eyes. I don't have a chance to sleep. I was in a meeting and I came out and I had 108 text messages, and I'm pretty good at responding to text and phone calls as soon as I get them, but I couldn't get to them all fast enough, and that was really bothersome for me. But it's been like this for the last week or so. But yesterday with the Fed meeting, there's a lot of counseling and a lot of talking people down off the ledge. And, my overwhelming theme was, it's going to be okay. It's going to be okay. So I was really happy when you texted me, and I saw your text right away, and I said, yeah, let's talk and let's let everybody know that it's all right.
Well, and I think the problem is everybody is saying the Fed increased rates, and that's about the end. That's all they're reading. That's all. And because the Feds have been increasing rates for the last month. And if you would have told me 2 months ago, we would have gone up 3 points in like 30 days, I probably would have laughed at you. There's been a lot going on. And so I think everyone just saw that, panicked. But when you read into it, what actually happened? What did they increase?
So, and this has been a long time coming, right? And those of us who have been ignoring it have just been sleepwalking through life, and a lot of us like to do that sometimes. But the reality is that this is a cycle, and the incredibly low interest rate environment that we've been living through the last couple of years was truly an anomaly. And I cannot tell you how many times I've used that exact phrase with clients. Don't get used to it. This is especially first-time home buyers who didn't ever buy a house in the 1980s or 90s or even in the early 2000s. And they're like, yeah, but where's my 2.5 or where's my 3.5? And I'm like, yeah, those days are over. Rates were never, ever, ever, ever that low. And it was all part of the stimulus package during the pandemic. And I don't know how many people really understood that that's what was happening during that time. Just like they sent out stimulus checks to families, and they had increased unemployment packages for those who had lost their jobs or who were inconvenienced with less hours during the pandemic. They also stimulated the economy by helping lower interest rates and the borrowing power of the banks. So how interest rates are derived is basically the interest or the amount of money that the banks have to pay, or Wall Street has to pay the central bank to borrow those funds. So when we hear that the Fed Reserve or the Federal Reserve is hiking the interest rate, that is the wholesale amount, if you will, that they now have to charge banks or lenders to lend the money out to the borrowers.
Okay.
That makes sense?
Yeah. And you're right. This was kind of coming. I mean, I remember just a few months ago, buyers saying, yeah, the interest rates are low, but I'm not going to pay this much for a house right now. And the truth is, this is what happens. Like, I wish overnight magic wand came out and the market became where everybody was happy and it benefited everyone. But the bottom line is you got to increase those rates to bring down those prices.
And
And
that's a really good point. And I don't mean to interrupt, but how many times did
no.
we hear in the last year from clients, I'm just going to sit this market out.
Mm-hmm.
I'm going to wait because you know what? These interest rates are really low. They're going to stay low. And we're going to wait till there's a housing crash or there's a bubble. And I'd be like, interest rates aren't going to be this low. And we're not in a bubble. This isn't like 2008.
No, but even in 2008, when we were in the bubble, interest rates were still higher than what they were now.
That's a really solid point. So the interest rates, the average interest rate in 2008 was 7.5%, 8%.
Mm-hmm. Yeah.
So that's what we forget. And what's different is we have so much more equity today than homeowners had in 2008. That was the problem in 2008. People were underwater in their homes. It wasn't that the interest rates were too high. They were underwater. There was no appreciation. And we have so much equity. We have, I think the number is like 9.9 trillion in equity that homeowners have right now. That's phenomenal.
Well, even kind of what we're seeing with the real estate market is, yeah, for months. I mean, sellers were saying, hey, I know my home is only worth, let's say 500,000, but I want to put it on the market for 525 and see what happens. I'm sure someone's going to come in and waive the appraisal, waive the inspections. I'm going to get what I want. And buyers at the time, because they're like, well, I need a house. Okay. They were paying top dollar, and a lot of buyers were saying, you know what, no, I'm going to take a step back. I'm going to wait till it drops a little bit. It's not as crazy, and I'll step in then. And the thing is right now what we're seeing is, yeah, interest rates have gone up, but sellers are putting their homes on the market for what they're valued at, and they're sitting because buyers are more skeptical. They're going in and saying, well, my monthly payment now is a little bit higher than what it was. I want to make sure I get what I like, but this is just, it's stabilizing. Yeah, it's kind of crazy when all the news comes out and everybody wants to freak out, but what we're seeing on the market is homes are lasting longer than overnight, and they're getting realistic offers, which is what we need to do. Back before all this stimulus happened back in 2018, even 2019, where I would say the market was a little bit more balanced. We're seeing more of that. And that's when, sellers get what their home is valued at, not what people are willing to throw money at to make the deal happen. And so this is kind of sellers, but sellers are fine with it because sellers still have equity. It's not a bad situation. They're just coming to the realization that the buying frenzy is over. Yeah, they'll get what they want, but it's not going to happen overnight. And you may have to do, I mean, I'm seeing so many price reductions just left and right. Like my clients are coming back to me and saying, hey, did you see they reduced this $10,000 last week? Fantastic. We haven't seen that in a while. That's great because sellers accept it. They know.
And don't you think though that's the biggest part of your job as a licensed real estate agent is managing those expectations with your sellers and saying, listen, those days of crazy multiple offers, and they're not really the same as they were 6 months ago. And you need to have a realistic offer your first time out, because if you don't, it sits on the market longer and people expect you to come down on your price more or do concessions. And let's just go out there with your best offer, right?
It's true. Go out there with your best offer and your best foot forward. So right now, what is your advice to buyers who are coming to you and saying, because I'm telling a lot of my buyers that right now is the time. Inventory, it's there. It's not such a saturated market. You're going to be able to negotiate and do a little bit more. So what are you telling your buyers who are calling you saying, interest rates just went up? What am I going to do? Can I buy? Am I being priced out? What are you telling them?
Well, number one, and this is what I told buyers, even when interest rates were 2.5% and 3.5%, buy what you can afford, right? Yes. So if what you could afford a year ago, it was a lot more than what you can afford now, then make that adjustment and buy what you can afford, buy what fits into your budget. So that's key. Don't try and push it. And I'm always really very realistic with my clients. And I go through like a full questionnaire with clients, and we look at their lifestyle and we look at their debts and we talk about that. You know, I joke often and say, I'm not just a loan officer, I'm a marriage counselor, I'm a therapist, you know, I look at their tax returns and, you know, and I had a client call me this morning and he said, I think, you know, he's ready to close next week. And he's not going to say his name. He said, I might have a problem. And I said, what's that? And he goes, well, that one key account that's on my credit report, they never reported the full amount because that project hadn't been finished. And I think it's going to start reporting now. And I'm like, ugh. I said, well, first of all, and this is my point number 2, always tell your loan officer everything. Be incredibly honest. Because if I know the full story, I can find the best solution to make the loan work or move into the right loan. And, you know, is now the right time to buy? Absolutely. Because the interest rates we're seeing today are lower than probably what we're going to see next month or in 6 months. And
Okay,
I'm just being realistic. Okay.
So I guess that's my next question for you. And you and I kind of talked a little bit about this is with all the frenzy that has happened, a lot of buyers, when they were looking for homes, decided they didn't want to fight people. They would rent for another year. They went to new homes. And you and I kind of talked about this a little bit because new homes, your rate usually is not locked until about 30 days before completion. So as a lot of buyers are going to new builds, they're not understanding that, hey, that interest rate they're quoting you right now may not be the same in a year. So are you running into those situations where they're calling you going, Denise, I don't know what to do?
Yes. And oftentimes those buyers are using the builders in-house lending companies, and they're brokers. They're good at what they do, but they're brokers. And so they're subject to whatever mortgage companies they go through, and they don't have any control over the rates, right? No. So if they were pre-qualify, let's say for a $600,000 loan 5 months ago, but that house probably isn't going to be ready for another 6 months, maybe.
Oh, really hopefully know. That would be great.
And your rate isn't locked in. What's your interest rate going to be? Yeah. Because if you were qualified at 4%, and today it's 6%, your payment's significantly different on that loan. Chances are, unless you're putting down more money, you're probably not going to be qualified anymore. So I'm getting a lot of those phone calls.
So another thing that I've seen a lot of people mention with the rates going up, it just what you can share on it, buying down rates. Are you seeing a lot of that?
I haven't in the last couple of years. There was really no need to. No. There was the random person who was more of an ego thing, who, you know, qualified for 2.875, and they're like, just tell me how much it would cost to buy it down to 1.9, you know?
Yeah. Just so they can say they have a 1.9 interest rate.
Okay, let's run this exercise just for fun. But the reality is now, if it's pricing out at 6.25, then we're going to start seeing some more buy downs, because it probably will make sense. In certain instances, if you think you're going to be in a house more than 5 years, then let's do the math, and let's see if we can recapture that expense. So if your loan is $500,000, 1 point to buy it down is $5,000. So 1 point is 1 percentage point of the loan amount. So 1 point would be $5,000. So we can back into that and back into what your payment would be without buying it down, what your payment would be with buying it down, and see what your ultimate savings would be, include in there the cost of buying it down and how long it would take for you to recapture that.
Okay.
So there's a couple factors we have to look at. How long do you think you're going to stay in it? Ultimately, what's your long-term goal, and what your savings is.
Okay. No, that makes sense. That makes sense. But just the fact that it is an option, because I do know there's a lot of, it's probably just lenders themselves who do not want to do that, who are very standoffish when it comes to, oh, can I buy down my rate? I'm not sure about that. So,
you know, really, if you have a loan officer or a lender that kind of gives you pushback on that, you might want to explore working with
time to
different
shop.
lenders. Because
Yes.
ultimately, it's what is right for you and your family and your budget. And that's what it all comes down to. I just referred a loan out to a colleague of mine at a completely different bank because
Yeah.
I knew that she would take really good care of him. I couldn't do the product that he was looking for. He thanked me profusely, and he was shocked I wasn't getting compensated on it. And I said, no, maybe she'll buy me a cocktail at happy hour. I don't know. But,
Yeah.
as long as you're taken care of and this works for you, then that's all I can ask for.
Well, and I think that's the big thing, like within the industry, and we're going to see a lot because we are going through a definite market shift where, I mean, it's not 2008, but we are going to see a lot of people kind of back up. We've already started to see, I think I read something that in the last month, 94,000 real estate agents have done. They've exited the market.
Yeah.
With that, we are going to see that, those who stick around, it is a people business. And I can't tell you how many times I've had to look at a situation and go, you know what, it is better for you to do this with someone else and refer it out, because the bottom line is we're here to make this work for you guys. So that's why I'm saying, even if you're joining us later on this, if you have any questions, we understand. We want to help you out. You are more than welcome to shoot. I'm going to tag Denise in all of this, and all of her business information is going to be in the comments below. Contact her if you've got questions. She is fantastic with getting back to you. So send them to her. Ask her your questions. You're in meetings, you're on calls. You know more of what's going on the Fed front than everybody who's just getting the news outlets. So,
and much to my husband's dislike, I do, if you send me text and I don't get back to him during the day, and Tiffany knows this very well, I sometimes will respond at 10:30, 11 o'clock at night, or I'll send an email. So if I don't get back to you right away, don't be offended by that. I will respond to you. It's just who I am. So yeah, if you're not working with me, it's okay. I'm happy to give you any advice I can, and I'll be brutally honest.
Yeah, and I'm the same way. Right now I am in the market. I am personally selling my house. So I am experiencing this firsthand. So if you have any questions about the market, what buyers are seeing, I mean, overall, I can honestly say right now, this is what we wanted. This is what everybody's been asking for months. But the way of getting there, it does, interest rates go up and home values have to come down. So what we're seeing is what we could have expected. And it's a good time to buy.
It really is. And not to beat this horse, but let's just talk for a second why we needed to have this interest rate adjustment. It's not just based on the, ultra low interest rate environment we had that wasn't reality, but when the economy is moving into a pace of inflation, what has to happen is it's a very fine dance, right? And so the Fed has to, and this is historical, you can go back 50 years, and if you're a historian, you can look at any of our Federal Reserve chairmen and how they've had to sort of manage through these situations. But what typically happens, and this is not a political statement at all, but what typically happens is the Fed Reserve tends to be overly aggressive and they overcorrect.
Mm-hmm.
So I'm going to go out on a limb here and say that even though we're going to see more interest rate hikes before the end of this year, probably 4 of them starting in July,
Mm-hmm.
It's probably an overcorrection, right? And that is just part of the cycle. But then it will start to level out. No different than, home values go up, 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 and then they start to flatten out. It's the same thing. Because with home prices and home values, right, you either have appreciation, depreciation, or we simply have, help me with this, Ms. Realtor, you have appreciation or deceleration, right?
Yes.
Which is just kind of holding steady. You accelerate, but at a slower pace. And so that's what ultimately is going to happen with interest rates. We have to get them back to somewhat of a normal pace, and then they're going to flatten out.
It's true.
So this is the new normal, people. This is just the new normal.
Well, and another thing to mention is, and we've always been at the top of the list when it comes to places to move. So Arizona is still one of the top real estate markets to be and to be buying in. And every day we are getting announcements of new companies that are building here, expansions that are happening. The bottom line is Arizona is growing and people need homes. People are coming here. And so that's why sellers, yes, you might be seeing that the value of your home, instead of just skyrocketing constantly, is going to start leveling out. But there are buyers who will still buy your home. So you're not going to be sitting on the market for month after month waiting for something to happen. If you have a good realtor who educates you on the market, you will be able to sell your home. Buyers, their inventory is so high for years. It's probably been 2 years we've been complaining about the inventory and how low it is. I remember when it started dropping and we were like, oh no, what's going to happen? Things are looking better right now. The market is still great. That's why I guess what I'm trying to say. Don't lose hope. This guy is not falling. All of this is manageable.
This is all manageable. And I think now is probably even a better time to buy than it was 6 months ago, because it was emotionally exhausting for everyone involved. The number of offers that were being presented, the number of offers that you had to go through if you were a buyer and hope that yours got selected. It was like, having the winning lottery ticket, right? And you're not seeing that. And you're seeing, to your point earlier about the number of agents that are maybe exiting the market. Well, now you've got the true professionals, the ones who really understand market conditions, the ones who truly know how to negotiate and get the best offer for their clients, the real estate professionals who know how to keep you out of legal trouble because they understand a contract. Because honest to goodness, I can't tell you how many contracts I saw that people didn't realize that this is a legally binding contract. And it is.
It is.
So this is a really good time to buy. And there is a good amount of inventory on the market with really great product. And to your point, I mean, this is a great state to move to. And there's no
maybe not with the 103 outside. It might not look too good right now, but other than that.
I have a lot of clients in Seattle and it's been raining there. It's like the rainiest season in 50 years and they love coming here even when it's 100 degrees. So I think we're still okay. We're still okay.
We're still looking good. I mean, we can stay inside. We're good. My kids love splash pads, so this is just more reason for me to just lay there and just let them play. So it works.
Yeah, exactly.
Well, good. Well, thank you so much, Denise, for taking time and being with me today. Like I said, yesterday was really crazy, and I thought the best way was let's hit this head on. Let's go for it. And as questions come in, guys, even if you comment, I will send them over to Denise, and we will be able to help you out as soon as possible. And even as things keep going. I mean, I was actually doing an interview yesterday and someone told me like, what is the hardest part in this industry? And I told them, I was like, it's managing expectations, because one day you'll come out and say, oh, this is it. And then the next day it completely switches around. So even as changes are happening, please know we're here. We are experts in our field. We are doing our best to stay on top of all of this. So if you ever have any questions, even if it is 11 o'clock at night, I have young kids. I like having some time by myself. That just happens to happen at 11 o'clock at night. So shoot me a text. Denise is up and we'd be happy to help you out. That is why we are here. So thank you, Denise. Again, thank you so much.
Thanks, Tiffany. Always so much fun.
Well, we'll chat again soon.
Absolutely.
All right.
Bye, everyone. Have a good day.
You too.